Time for the market report, another turn to the upside.
That's right, Mike. We also dig into some USDA reports and a look into row crops. But first, the numbers. What were the week's biggest gains and losses? And then, this month's cattle on feed among several USDA reports. What do they have to say? And finally, in our row report, a market analyst tells us what's really moving the corn markets. So, markets closed, this time moving up. Livestock down while row crops split. Let's take a look. The week's biggest gain, cotton up 4.5 cents, nearly a 6% increase from the previous week. The week's biggest loss, lean hogs, down over 2.5 cents, more than a 2.5% decrease from the previous week. So, several USDA reports recently came out updating us on our livestock situation and how planting season is progressing. In short, cattle on feed down slightly from last year, egg production up, and planting is just underway. Here's the details. In this month's cattle on feed report, cattle and calves on feed for the slaughter market about 11.5 million head, 1% down from last year. Of that inventory, about 7.25 million are steers and steer calves. Heifers and heifer calves over 4.25 million head. Placements in feedlots during March totaled nearly 1.75 million head, 7% down from last year. Placements were the second lowest for March since the series began in 1996. Marketings of fed cattle during March totaled over 1.5 million head, 6% less than last year. Marketings were the second lowest for March since the series began in 96. Other disappearance totaled 50,000 head, 9% below last year. In the chickens and eggs report, March egg production totaled nearly 9.25 billion, up 5% from last year. Production included nearly 8 billion table eggs and over 1.25 billion hatching eggs. Average number of layers during March, 376 million, up 5% from last year. Total layers in the U.S. at the beginning of this month totaled 373 million, up 4% from last year. Rate of lay per day averaged about 79 eggs per 100 layers, up slightly from last year. In the crop progress report, the 18 highest corn-producing states so far have planted 11% of corn acreage, the same as last year and 2% above the 5-year average. The 18 highest soybean-producing states so far have planted 12% of soy acreage, 5% higher than last year and 7% higher than the 5-year average. The 15 highest cotton-producing states so far have planted 11% of cotton acreage, 1% higher than last year and the 5-year average. This week in our row report, we focus a bit on corn. Price has been staying somewhat consistent and not moving too far. Analyst Ted Seifried says that has to do with ample supplies in the world and competition from South America.
There's a couple things that have been holding corn back. One is we had a 17 billion bushel crop last year, according to the USDA. And there's a lot of bushels that we have to get through before we can get really excited about corn. We've had wonderful demand, but when you have a 17 billion bushel crop, there's a lead time where we have to chew through that supply of corn. So that's part of it. Also, I think the funds got a little bit too long, a little bit too early, and maybe for the wrong reasons, right? They got excited about the energy portion of corn based on, the war in Iran and Strait of Hormuz being closed. And, oh, wow, energies are going through the roof. And while corn does have a significant portion of its balance sheet that is dedicated to energies in the form of ethanol, you cannot put raw corn kernels into a gas tank and run a car, right? There's a process that has to happen. Corn has to be ground into ethanol, just like soybeans have to be processed into soybean meal and oil. It's not something that you can go from one day to the next and say, oh, we're going to double our output of ethanol. It's just not a thing. And I think Wall Street's maybe realized that. They've trimmed some of their bullish bets on corn. And I think this is now a much more healthy atmosphere or climate to maybe see a more seasonal rally for corn going into our planting season in the first half of our growing season. So I like what's happening in corn. We've come back off the highs. I think we're set up for good things to come maybe going forward. I think the activity that we saw this week kind of feels like a bit of a bottom. The one potential monkey wrench that we have in this whole equation is South America. I mean, it's always South America. But in particular, you look at what the recent estimates for Argentina have been coming from the Argentinian reporting agencies, namely the Rosario Grain Exchange and the Buenos Aires Grain Exchange. And oh boy, are they very aggressively increasing that Argentinian crop. Part of that is because they got better weather from about middle of February on. Another part of that is they're citing increased acreage, about 4% higher than what they had originally thought. which, by the way, if that sounds familiar, you just have to go back to our last growing season to see how that happens. And that's wild. It's wild to me to think that that can happen in two of the major exporters in two consecutive crops, where acreage is just so much bigger than what was originally expected. But either way, you have the Buenos Aires Grain Exchange at 62 million metric tons as of their last estimate, which was earlier in the week. That's 10 million metric tons higher than the USDA. And you have the Rosario Grain Exchange at 67 million metric tons, 15 million metric tons higher than the USDA. And Argentina is important because while they don't grow as much corn as Brazil, they are a very big exporter of corn, and they will be competition for us at the very tail end of our marketing year and going into the next.
And that's it for a deeper look into the markets. Seems like the global situation will continue to affect row crop prices here at home while livestock's still on a rebound.